Real estate market rests on four pillars: supply, demand, wealth, and economy, or the core factors that drives the real estate market. The rental market and other sub-factors are like the wind that causes a small shake-up from time to time. Any one or more factors that I have mentioned can create either pull or push effect to create some instability in the market. Instability does not always mean a downward trend. We must also recognize that the uncontrollable price increase also an imbalance in the real estate market. A good example was the runaway prices in 2021. Mainly when the demand and supply are not aligned, it can trigger an imbalance. Here both seems to travel in the opposite direction, and the demand keeps increasing and the supply does not increase at the rate to meet the demand. What further fuels this imbalance is the wealth. About 65% of the population owns a house. About 45% of those are mortgage free. On top, the rent keeps rising by 15 to 20%. It is a favorable investment climate and an appetite to stimulate the market even when the interest rates are higher. So the disparity in wealth distribution is an issue not only in Canada but around the world. Ultimately, real estate is a wealth-driven phenomenon, and at the same time, it is an unregulated and free market for those people who think wisely to exploit. End of the day, all it boils down to is demand, supply, and wealth. We must clearly understand the difference between the market meltdown versus the correction. It is quite dangerous to use these two words interchangeably. A market correction is an isolated fluctuation like air turbulence that creates an imbalance in the market. We often say correction when the prices trend downwards. Although when the prices went up significantly high in 2021, we never said it was a market correction, but that was also a market abnormality. Anyhow, these out of balance situations are usually short term and have a less economic impact. Sometimes a correction is usually healthy and warranted, but we must recognize whether the correction is sustainable and whether the facts and data exist to support it. We must also evaluate whether the true correction is triggered by the right reason to be able to sustain it, or it is an artificial one. Now, the market meltdown or collapse is the negative side of the market imbalance situation. It is like an engine failure of a plane in mid-air that causes the plane to have an emergency forced landing. Then it takes a long time to take off again. The consequence and impact are very drastic and dramatic, and it has long-term implications as well. Typically, it provides a lot of economic data, indicators, or signals, and Canada is absolutely not the country for a house market collapse. When there's a systemic pattern or chronic issue that triggers an ongoing out of balance situation, it can lead the market either to the positive or the negative. Although the continuous increase in real estate prices may sound positive, unhealthy inflated house prices like what took place in 2021 are equally dangerous, but we often fail to recognize it. What we see in Canada, especially in Ontario, is a systemic issue with the lack of supply and increased demand. On top, we also see a disparity in wealth distribution as well. This is to me a sign of house prices will continue to experience upward pressure. This also seems that we are in a housing crisis as well. As we all know, the interest rate hike announcements created the correction. There are two groups in the market: A, resellers, and B, pre-construction developers. Resellers panicked and lacked financial buffer. They do not do market analysis well, and they were the most influential in the recent correction. On the other hand, pre-construction developers do no analysis due to high cost of building, carrying cost, and pressure to maintain profitability. They do not have the flexibility for downward price adjustment. Panic through media creates psychological fear. On top, resellers were caught in the middle of a buying and selling process. Usually this cycle takes about 6 to 8 months of the correction time. After that, there's usually a point when people say the prices bottomed out. However, that is truly a situation when people come to terms with accepting the reality. The attitude matters as to whether we are unwilling to pay the extra interest versus unable to pay. We got into a comfort zone when the interest rates were too low and took things for granted. In situations like this, when interest rates rise, macroeconomic factors and household financial plannings are vital to manage this situation. The root cause of the issue with the real estate market imbalance was in the making for the last several years, when all levels of government took a hands-off approach towards affordable housing and left that with the private sector. Then, instead of enabling and providing the private sector with support and incentives to build more houses in order for them to build efficiently and effectively, they became an impediment by increasing the cost and introducing more procedural bottlenecks. On the other hand, the developers' soft and hard cost kept rising to push the pre-construction prices even higher. This is where the rubber hit the road. Unlike 40-50 years ago, people bought houses to live with their family and never thought about accumulating $1 million. Now people are buying homes not just for living but also be that as an investment. Therefore, it is not just a home buying decision but a long-term investment decision. There is never a good time and a bad time to buy. However, Warren Buffett once said, "You must be fearful when others are greedy and greedy only when others are fearful."